Hello again. This is Copelia Leitner, and it's Financial Friday. Remember last time we talked about the taxability of unemployment benefits, and I was urging you to check that little box so that you could be properly withheld? And a lot has been said about that. There's YouTube videos and articles and a variety of information out there on this topic. But I wanted to continue on this topic because there are a couple of lesser known aspects that may provide some relief for at least some of us. And so, as we're headed into tax filing season, I thought it would be appropriate for us to continue discussing it. So, first of all, let me just say, that $600 boost payment that the federal government added on top of the regular unemployment, well, it looks like California didn't withhold on that $600 payment, whether you check that little box or not. So the likelihood of you being under withheld is even greater. So be aware of that. um, and also, even if you didn't check that little box, uh, you could always prepare a form W-4 V as in Victor, or you can pay estimated tax payments to cover it. And then if you were only unemployment employed for part of the year, let's say, and you got another job or you increased your hours, you can always change your W-4 so that you can, you know, add a little bit more withholding to compensate for the unemployment that you didn't have withholdings against. So now I also mentioned last time that maybe Congress could, you know, enact some relief for us all on this in this area, but it doesn't look like that's going to happen on a broad basis. But what did happen in the 2020 year end, you remember the legislation that passed in December, it provided some relief for those of us who benefit from the earned income tax credit and child credit. These two important benefits, so many people can take advantage of those benefits, and the benefits are quite significant. And so what happens is that because the earned income credit is based on the fact that you have earned income that you work for, unemployment benefits don't count as earned income. So if you lost all or most of your earned income, that means your earned income credit is going to be severely impacted or wiped out. So what this legislation did was to say, okay, you can compute your earned income credit either using your 2019 earned income or your 2020 earned income, whichever is going to be most beneficial for you. So compute it both ways and see, which way is most beneficial, and that's the way. So just know to tell your tax preparer that, because this this hasn't been widely advertised, so many people don't know about it. Even tax preparers may not know about it, and even some tax preparation software may not be adjusted for this fact yet. So those of us who are used to, like, really being eager to get that tax return filed right away because we're waiting for that big refunds, you may want to pump the brakes a little bit to make sure that um, you can get the benefit of the earned income tax credit and the child credit if you are entitled. So, and let me just say a little bit about the difference between a tax deduction and a tax credit. So, a tax deduction, $100 tax deduction will get you $20 in your pocket based on a 20% tax rate. A tax credit is going to put $100 in your pocket. So that just lets you know. In 2020, the earned income tax credit, it can be anywhere from 500 or so dollars up to well over $6,000. So it's quite valuable. And then there's a difference between the types of credits. So there's a refundable credit and a non-refundable credit. Non-refundable credits only get you as much as your tax liability is. So, you could get credit back from, up to your tax liability. A refundable credit can get you even more than your tax liability. So just know that. Earned income credit is a refundable credit. The child credit is can be refundable or non-refundable depending on your income level. So just know that. And just want to say too, there's a lot of fraud out here that's around these cards that unemployment benefits go on. You may want to look into having your benefits paid directly to your account, or either if you have the card, get that money off the card as soon as possible, because there's a lot of fraud around it. People's money is it's going missing, and it takes some time for them to get it back in your on your card. So just be aware. All right, this is Cophelia Leitner. This is Financial Friday. Enjoy your weekend. Goodbye.